Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Seresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for May 23rd, 2011. This is Patrick Seresna. As always, we start off with a chart of the S&P 500 using that spider exchange rate, fund symbol SPY. Over the last 3 months, we've been continuously talking about that. We've been anticipating a market top somewhere around the 136 to 139 level on the upside. We're now seeing that topping formation and market rolling over occurring as we speak. We're really at this juncture just beginning to roll over, and if we have any accelerated selling over the next week, we could see a very fast and quick drop, not only down to the 130, 131 area, but we could also see, if the conditions are right, a market decline all the way down to the 126 to 127 level on the downside. This is a market environment that is overdue for a corrective market drop. We don't necessarily believe this will be the beginning of a new bear market, but in all market advances, they are usually followed by a good, healthy market correction that rebases everything and gets the whole process going again. So at this juncture, the risk is very high of a market decline and a correction down to even the 126, 127. If the market decline was very rapid and very strong in the much bigger picture over the next month or two, we could even see 122 or even 118 on the downside. Next year, I want to take a look at the ISE US Regional Banks Index, which is a symbol JLO. We drew that trend line that's sort of defined all of the lack of rallying that we in the regional banks indexes. There was simply no strength, and every time they try to rally it, it fails to make even a higher high. At this stage, if that 24 and a quarter support line is given out on the downside, it opens that window for the regional banks to head down towards the $23 area, but there's room for them to even decline further, all the way down to even 22 and 21 support lines down below. If this short-term support line is given out, in the bigger picture, there's been no strength in this index. There's been no attempts to break it out, and now that the whole market is beginning to deteriorate, regional banks should be relatively weak. Next year, I want to take a look at the ISE Sindex, which is symbol SIN. This is an index of all the casino, tobacco, and distiller companies. Now, we're at a crucial moment. We've been looking and suggesting that the measured move on the Sindex should come to an end right up along this zone. We now are trading right in the 140, 142 area, and this is actually a very crucial moment, because if we fail to rally on this last week's little spike higher, and the Sindex rolls over, then we have a pattern sort of like a crowning or head and shoulders pattern, whichever way you want to identify it. If that pattern comes through, then a corrective pattern should not only head down towards the 134, 136 area down below, but can make it probably even as low as the 130 area on the downside. So this is a crucial moment where we're about to find out whether the Sindex rolls over or not. Next year, I want to take a look at the ISE Home Builders Index, which is symbol RUF, and the home builders gave out that 920 support line over the last 2 weeks and really started to move its way down. We now have hit that support line at the 850, 870, where all those lows came in back in November. But more than likely, if we have any failed rally here, especially if it fails below the 920 level, it should roll over and still maybe even head down towards the 820 area down below. And so expect further weakness from the home builders index. Next year, I want to take a look at the ISE Natural Gas Index, which is symbol FUM. We had that double top come in, the break of the neckline, and now the initial bounce came off that 125, 127, that support line we've been identifying. But any failed rally attempts in the natural gas index anywhere in this 131 to 137 area will roll over, and the natural gas index should probably head even as low as the 120 level, if not lower, on the downside. Finally, I want to take a look at the ISE Mini FTSE 100 Index, which is the symbol UKX, and the London market has really been sideways range bound between this 590 to 610 area, back and forth, but that the further deterioration here is fully expected, particularly if the global indices and including the S&P 500 and DAX and all of those other global indices, if they start rolling over here, the FTSE will roll over with it. When that 585, 590 support line is given out on the downside, it'll immediately open the window for the FTSE to drop all the way down to the 555 to 560 area on the downside over the next couple weeks. So watch for the immediate risk of that support line being given out. That was the ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.